I just want to confirm, can you see my screen as well? All right, I think in that case we can start. Today we'll be talking about, or rather introducing GT247.com to our clients, and also, introducing what spread trading is and forex trading, and get an idea of how to navigate the platform as well, so that you feel a lot more comfortable, navigating the portfolio and understanding the different areas and the concepts within the platform as well. All right, so let's start off by introducing who and what Emperor is, or rather GT247.com. All right, we are the leading South African discount broker with the strategy of producing a low-cost online trading platform and investing products focused on innovation that makes it easy for users to start trading, and thus reducing the barriers of entry and engaging clients to rather take control of their trading and investing activities. All right, and providing another avenue of wealth to our clients. And as such, we provide access to local and international markets. All right, we offer this. We provide this entry into local international markets in two different ways, on our CFD platform and on our spread trading platform, and that's the focus of today. Rather, the spread trading platform than the CFD platform. And on your spread trading platform, you have the opportunity to trade international and local indices, currencies, commodities, and bonds. All right, and what exactly separates us from our key, competitors? What are our differentiators? So number one, we are low cost. All right, we're very competitive in our cost structure compared to any other spread trading platform. We have a social trading platform as well, where novice and entry-level trading individuals can learn from each other in terms of a social network. So on the social network, Smart Traders and The Wire, you're able to see the trades that more novice, more experienced individuals are placing, and from that, you're able to learn. All right. We provide local and international markets using the Rand. So in that way, you're negating foreign currency risk and still having the opportunity to trade local and international markets. We have enhanced liquidity, so any trade that you place, it's more than likely and almost guaranteed that you'll be able to, sell or buy your particular instrument very easily without having the hassle of, trying to find a participant to having to facilitate that trade. So we provide that liquidity in a sense. We have a fast and functional trading platform, very easy to use, and that is definitely our differentiator in comparison to our competitors. All right. As I said, we have the low, very cost-effective and cost-competitive platform. In that we have zero platform fees, zero monthly fees as well. The spread commission is very low, between 1 to 2 points, and although we do have an inactivity fee if you do not trade for more than 12 months. So I guess in this regard, make sure that you trade at least once every 12 months. And a standard fee applies, that is the JSE data fees, and you would find that fee across board on any platform that you would find in this country. All right, now I've decided to focus in this webinar on introducing currency trading, because it's become vastly popular amongst our clients. So as by way of an example, I will be focusing on currency trade, but I think it's important to note that commodities and bonds and indices work very much in the same way on our platform, but because currencies are so popular. I think by way of example, I will focus on currencies during this webinar. All right. So essentially, what are currencies? Simply put, currencies are also known as forex trading, and so that's forex is foreign exchange, and that is a generally accepted form of money issued by central banks which circulate within the economy. The currency is used as a medium of exchange for goods and services, while foreign exchange involves the trading of one currency for another. All right, and FX markets refers to the global market where currencies are traded. The reason why forex markets have become so popular to trade is because of their daily market turnover. It's much higher than those of bonds and equity, and that provides, in a sense, liquidity and ease of trade. And because of this, there's this very high daily market turnover. There's great opportunity for price movement, and thus great opportunity for increased profits in that sense. And if you look at the pie chart on your right, you would see that currency trading is 95% in comparison to currency conversion. So that is quite a lot in terms of movement of currencies every day. So you can expect, and in trading, you really want volatility in the markets, because volatility allows for increased profits. All right. As a derivatives trading company, we offer derivatives on currencies as well. So what currency derivatives are, they are basically financial derivatives whose payoff depends on the price of the underlying currency pair. So the movement of the currency pair, in a sense, provides the value to the currency derivatives. So, and it's important to note that there is no physical currency that is actually bought or sold. Instead, the price of the derivative contract is derived from the price of the underlying currency pair and its movement. So no physical currencies, euros, dollars, are exchanged between the buyer or a seller. Rather, it's the value of the underlying asset and its movement because of it. All right. Understanding leverage. In what we offer our clients at gt247.com is an opportunity to enter into a transaction via leverage. And what leverage offers you is an opportunity to get into a contract without putting down the full value of the share. So essentially, you're putting a small amount towards the instrument in order to trade it. So this essentially allows you to trade a position that you would not otherwise be able to enter into, because in real terms, it would be too expensive. So while putting a small amount relative to the market value against the instrument, you're able to enjoy the profits of a favorable move towards your instrument that you're essentially trading. So in a sum to what I've just said, spread trading allows the client to buy or to sell a financial product with substantially less money than the actual full value of the financial product. So why trade currencies at all? The forex exchange market is large and very liquid, and that's important when it comes down to trading, because you want to be very sure that when you sell your position, there will be a subsequent buyer. And with over 50 major currencies and 17 currencies traded on our platform, they are all constantly moving against each other, and they are trading in pairs. So when we refer to forex trading or currency pairs, we relate to one currency against the next. So, okay, the Forex markets are open a lot longer, so you have more opportunity to trade currencies than you would bonds or equities. So, to be particular, it's open 24 hours a day, 5.5 days a week. And like I said before, there's leverage offered on currencies as well. All right, these are the 17 currency pairs that we offer on our platform. And I think the most popular that I find our clients love to trade is the Euro USD. All right, this is just a summary of how we quote or how currency pairs rather are quoted in the market. Like I said, the popular Euro USD is quoted in dollar terms. So the base currency is the euro, and its quoted currency is the US dollar. So 1 euro is a value of $1.1351. On our platform, you'll notice that there are two prices on our platform, the bid price and the offer price. So what the bid price represents is the price that the market maker is willing to pay should you wish to sell the instrument. And the offer price represents the price that the market maker will be willing to sell you if you wish to buy the instrument. And the difference between the bid and the offer price is referred to and commonly known as the bid-offer spread. So if you're speculating that the Euro USD will increase in value, you'll buy this particular instrument at the bid price. And subsequently, if you're speculating that the Euro USD will decrease in value, you will sell rather at the offer price. All right. Traders hope to generate a profit by speculating on one currency value against the next. So one currency is usually strengthening against another, while the other currency is weakening against the other. So just to give you an example of that, if you speculate that the price of the Euro USD will increase, you will enter into a buy position, like I said, and it will increase in terms of the euro depreciating and the euro depreciating against the dollar. So in actual fact, the dollar is strengthening, allowing you to buy a euro with less dollars. All right. So both provide opportunities for profit regardless of whether you're bullish or bearish. In a bullish market, subsequently, you will buy currencies, and in a bearish market, you would sell currencies. All right, this is just a snapshot in terms of our portfolio and how it's structured. And the first step in going about trading a currency or trading any instrument for that matter is to go to your product navigator, select a specific instrument that you would like to trade, and put that on your watch list so that you can kind of keep an eye on its movements. Step 2 requires you to double click on the currency that you wish to trade in your watch list and then select whether you would like to buy or sell it after you've done your homework, you've done your fundamental analysis, you've done your technical analysis as well, and you've decided, whether to buy or sell at that point. And when you double click and wish to trade on this currency, a trade ticket will pop up, such as the one on your screen right now. And just to go through some of the particulars on this trade ticket, you've got the sell and the buy icons. And if you were to buy, you would buy at 0.7750. That risk point right under those icons acts as a profit and loss amplifier. So if you're very certain that your particular trade, for instance, say for instance you entered into a buy trade and you're very certain that your trade is going to move in the desirable direction, that is an upward value, you can increase your risk per point from 1 to all the way through to 500 points. So your profit, if moved in the desirable direction, will multiply by the risk per point that you have stated. And I will get to that later in an example. All right, and the price underneath that risk metric that you would enter into is either market, full or kill, or limit. The market price would be the market price that is stated at the moment you buy. A fill or kill order is if sometimes in a market there is slippage. So what I mean by slippage is that the market can move so volatile that as soon as you place the trade ticket, the price moves very far from where you entered into. So it's either you fill out a price, or if it's not there anymore when you place the trade, it will kill your order. All right, and the limit just provides you kind of a leeway in terms of if I place this trade ticket and the market does move, I give it X amount of leeway to move in a direction. But if it surpasses my limit, my leeway, I would rather not get into this trade. So we have those kind of risk management tools for you to enter into in case the market moves, in case the market becomes too volatile and misses your target entry price. We also have risk management tools in terms of a stop loss, and that is really just to kind of limit your loss that you might otherwise get if your trade or your speculation, might have been wrong. So there is essentially four ways to set a stop loss. There's an auto stop loss, a minimum stop loss, maximum, and a manual. The auto stop loss is a stop loss that gt247.com will suggest for you if you're not certain where to place your stop loss. The minimum stop loss would be very close to your entry level, so giving you will be set very close to your entry level. So if the trade moves down to your entry level, if you were in a buy position, it will close your trade out very quickly, very soon. In a maximum stop loss level, it will be set very far away from your entry level. And essentially people do that when they want to give their trade, if they're in a situation where the trade moves down past their entry level, kind of time for it to kick back up before it closes out at your stop loss level. And if you want to set a manual stop loss level, like you have a specific stop loss level in mind, you can manually enter that stop loss level as well. Now we've discussed the stop loss level. On the other spectrum, we have the take profit level, where you would essentially place a take profit level above your entry price, where you're comfortable on taking your profit. So what you're essentially saying is that if the market reaches my set take profit level, I want to take my profits and close my trade essentially. All right, and the trailing stop is really that it trails your stop loss. So if your profit moves in an upward direction, so the direction you speculated it would move, and you state that your trailing stop should move by 5 points every time your take profit moves by 5 points. So essentially what will happen is if your take profit moves in a positive 5-point direction, your stop loss will trail your take profit by 5 points. So essentially moving your stop loss in 5-point increments if your take profit moves in 5-point increments. All right, and your guaranteed stop is a metric that clients would use if you're in a volatile market, because sometimes what the market would do is it would move very quickly past your stop loss level and would stop you out at the next best stop loss level and not the one you had set previously in your trade ticket. So what the guaranteed stop allows you is that it would stop you out at the specific level that you had specified in your stop loss whether or not the market had reached that level or not. All right, and then in the box below that, just gives you a kind of a trade summary of what you've just done. And if you're happy with that that trade summary, you would click sell. And you should also notice that once you've placed this trade, you are required to maintain a margin. The required margin in this instance will be in the region of 137 Rand for this particular trade. Are there any questions at this point? Is everyone happy with what I've just said? All right. All right, moving on. Step 3, you can monitor your trades through the Open Transaction tab. So once you've selected a buy trade and you filled out your trade ticket, this particular trade will then appear in your Open Transactions. And subsequently there you can monitor if you've been making a profit or a loss and the movement of your trade ticket. All right. Currency speculation. So here's an example. Assume you short the euro, the euro against the franc at, you know, one franc and 0.2 in a 100 risk per point. And the Swiss National Bank came out and said they were removing the peg against the euro and cutting interest rates to negative 0.75%. And this announcement sees that the franc surged to 0.8630. So essentially, the franc had strengthened against the dollar. You required now a lot less francs to purchase a single dollar. And should you close the trade, you would have made a profit of the difference between your entry level and the current market price times the amplifier of 100 Rand per point, which would then give you a profit of 157,000. All right. What you do before a trade essentially is you would look at technical analysis as well as fundamental analysis. So what technical analysis is, it is the study of finding patterns and trends in historical market data, which can be used to forecast where a currency is going in order to develop these strategies. And these technical analysis tools are readily available on our platform, and that's something I will then show you in an example after this presentation. This is an example of where the Euro USD is trending. Just kind of shows you the peaks and the trough of the Euro USD historically. Like I said, you'd also have to look at fundamental analysis. That involves the use of economic, political, and social data to evaluate the value of the particular currency in the market right now. Here's a fundamental analysis in the country. You can see that at 2 o'clock, I don't know if you can see that the market or the Euro USD had completely, dropped, and something must have happened there in the market, whether it be an economic announcement, something terrible happened in the euro. And so you can kind of follow these trends and kind of see what market news and economic data prevailed during this time that would have caused that increase or decline. All right, so to get started with gt247.com, you would have to open a simulated trading account. And this simulated trading account, we provide you with 100,000 Rand of monopoly money. And that's money you can use, to your heart's content in order to learn the platform, to develop a trade strategy, to get comfortable with the functioning of the platform, really. And once you feel very comfortable and very certain about your trade strategy and you found something that works for you, you can subsequently then open a live account and then take a chance with your real money. At gt247.com, we don't leave you to kind of fend for yourself. We do offer support in terms of free webinars, free seminars, and you can always contact us on the sales desk, where we are more than happy to assist you in your questions, or wherever you need assistance in terms of be it deposits, be it the functioning of the platform, or be it anything surrounding any of our other gt247.com platforms. Any questions at this stage? All right. If you do not have any questions now, and maybe might have a few questions later, what I can do is give you my email address that is shown on the screen. You can email me your questions and I will readily reply to you, or you can give me a call on my direct line at 087 940 6037. All right, thank you so much for attending. Thank you so much for your time. I do hope this webinar was beneficial. I hope that you feel a lot more confident about navigating the portfolio and the specific costs involved and what we at gt247.com offer you as a client. Please don't forget that we're more than willing to support you in terms of webinars, seminars, and you can contact us through the sales desk. All right. Thank you, everybody, for attending. Have a good day further. Bye-bye.